In this video, I'm going to teach you how to trade earnings announcements, how to swing trade them specifically. This is a huge moment for the company. There's new information, there's a price discovery process, asset managers are excited, and this is where we have incredible opportunities to trade. Now, we're trading surrogate market positions by trading the underlying stock, and there are many advantages to it. So I'm going to be going over that in today's video. Before I do that, I'd like you to please subscribe to my YouTube channel and to give the video a thumbs up. This content takes me a long time to produce, and I know from your comments that you're all benefiting from it. And please make sure to leave comments on future videos that you'd like to see me record. I'm simply trying to reach as many traders as I possibly can. And by doing so, you're going to help me reach my goal. So thank you for those of you who have already subscribed and who have shared these videos with other traders. It really means a lot to me. What are the different things that we need to look at when we are swing trading, and particularly when we're swing trading after earnings announcements? Well, first of all, we want to take a look at the previous price action in the stock. Why? Well, because it's going to give us an idea of what the character of that company is, what the character of that stock is. Is this a company that's stodgy? Let's say Procter & Gamble, who makes consumer products like toothpaste. That's all boring stuff, and you're typically not going to get the type of price action that we're looking for after those earnings announcements. No, the type of reaction that we want to an earnings announcement is going to be really nice, steady, tight, orderly progress with tight price action. And that tells us that institutions are accumulating these shares over the long term. They're not in it for the next day or two or three. The stock is oblivious to everything that's taking place in the market because these large players are accumulating shares. That increases our odds of success, and that's what trading is all about, is we need to increase our odds for success. So what the company has done in the past from a price action standpoint is going to determine what happens next. You can also imagine that if a stock has been on a tear, it's up 30% over the last quarter, that it probably has exhausted a lot of its upward movement. Not always, but it's something that we need to be aware of. We also need to watch to see if the stock has sold off. Is it in a severe downtrend? Is this earnings reaction simply a short covering bounce? So those are less attractive opportunities for us. Ideally, what we'd like is a go-go company that's been steadily marching higher. That allows us to predict that price action and stick with the position. Then we want to take a look at the actual earnings report. Okay, we have a big gap up. How do we find these stocks? What do the different gaps look like? Which ones present better opportunities for us? Which ones are less attractive? That's what we're going to be determining. Once that news comes out, we know that asset managers are anxious. We know that they're acting with urgency and they're motivated because the stock gaps up. It makes a huge gap up. That's going to attract some profit sellers, and there's going to be a digestion process. New money coming in, very excited by the prospects of the company, is going to be offset by those who've been in the stock for a long time and who are willing to lock in profits. So as the stock digests those gains, we want to watch the price action because it's going to tell us if the move is legitimate or not. And then finally, we're going to be looking for continuation. Once we have that continuation, we know that buyers are in control and that stock has a very good likelihood of grinding higher. And that's where our opportunity to add is going to come into play, and our ability to build a really nice position. Those are the different components that we're going to be looking at. Let's start with the previous price action. We've got a stock that's been really strong and has made huge moves. It's had a little bit of a pullback, but it's near its 60-day high before the earnings announcement, and then we get a nice big gap up. This is a good setup. Most of the time, this is an excellent setup. As I mentioned earlier, what we need to be aware of is that the stock has already made huge gains. It could be justified. In fact, this could be a new cancer drug. It could be a new GPU chip. We don't really know why the company is up. We only know that it's performed well in the past. Asset managers have been on board with it, and they really like the earnings announcement. So we get this gap up. But not all of these stocks are going to continue to rally. In some cases, and in these cases in particular, where you've already had a big run up, you're likely to see more profit taking. So we need to be very cautious here. We need to wait for at least 3, 4, 5 days to see if these gains hold. The longer they hold without any retracement into the gap, the more certain we can be that asset managers are going to drive this stock higher. This is a good pattern. This tells us that the company has excellent prospects in the future and that asset managers were anxious and aggressive to own it previously, and they continue to put more money into it. This is another situation, and I like this setup as well, where the stock has generally been moving higher. You have a series of higher lows, you have horizontal resistance, and then boom, the stock is able to break through that resistance. This is another good setup, particularly if this pattern is happening above all of the major moving averages. So the stock is above the 50, 100, and 200-day moving averages. And then, boom, it gets this nice gap up. What do we want to see by the gap up? We want it to clear all visible forms of resistance. We want it to blow through. We don't want it to nudge it. We don't want it to poke at it. We want to blow through it. Why? Because that tells us that buyers are acting with urgency. And then we want to see this gap preserved. We don't want to come back too far into it. We want to continue to build and build and build. And since this stock has not run really, really hard previously, it's in a general uptrend. This is a nice little breakout, and these tend to hold. So what we don't want to see is we don't want to see a retracement that takes out that horizontal resistance. We also don't want to see it fill the gap, because that would tell us that this excitement wore off very, very quickly. And the more quickly that happens, the worse, because it tells us that it was all fluff. And mind you, a lot of these breakouts are going to fail. Most of them might even fail. So what we want to find are the breakouts that stick, the ones where the stock moves higher, blows through all those resistance levels, blue skies ahead, as we call it. Those are the opportunities that we want to latch onto. And we're not going to pile into these trades, by the way. We're just taking a small starter position with the intention of building when we have price confirmation. We're going to build. We're going to add to the position. We are swing traders. This is also a decent setup, and this one has a little less likelihood of having a major pullback and retracement because it hasn't gone gonzo recently. This is another formation. If this pattern here, the stock has been in a long-term downtrend, we have a higher low double bottom, probably some downward sloping longer-term trend lines, and now the stock has gapped up. Well, if it's gapping up like this below all the major moving averages, it still has to get through all those resistance levels before it proves itself. If it moves right through them, great. With that type of follow through, okay, it looks like this company might actually be finding its footing again after a prolonged decline. This is not my favorite type of setup because it tells me that the company has had some woes. Now let's say that this is just a minor dip in the stock. And again, let's assume that these patterns are what the stock has done over the course of the last quarter, because that really is our window of opportunity. We're trading quarterly earning to quarterly earning. That is the stock's cycle. And if this was the price action previously, but the stock had been in a longer term uptrend, okay, well, you know what? It had an off quarter, but it's back on track. And now, if this gap up is starting to challenge previous all-time highs, great. This is not a bad setup either, because after a big previous run, stock spent a quarter digesting those gains, kind of getting ready for the next growth cycle, and now it's through that prior high. This would be a good opportunity, and the stock is likely to continue to grind higher. But again, that reaction is what we're looking for after that earnings announcement. Let's take a look at what's actually happened. These are 3 different size moves. I'm going to be getting into some specific stocks as well, so please bear with me because it'll be easier for me to explain this now and then to actually look at charts. So if we have a relatively small gap, that tells us that the stock is not overdone. Okay, there's still upward momentum. There's room for it to rally. Asset managers are not going to feel like they're chasing the stock higher. So small gaps up are nice. And there we want to see pretty instant follow through, continuation. If we have that, it's got a good chance of grinding higher. When the gap is small, it also tells us that that initial excitement wasn't very big. And a lot of those moves will reverse instantly. They'll pull back, and it tells us that that earnings reaction was, it looked good initially, but no big deal. And we get into kind of a medium gap higher. Well, what's a medium gap? What's a large gap? If you had a gap up that was, say, in this range right here, 3% or so, that's a pretty small gap. If you have a medium gap that's going to be somewhere, let's say in the 7 or 8% range, that's very reasonable. And then a large gap would be somewhere in the 12 to 15% or more range. In a medium type of gap, you're going to see usually a little bit of pullback, but the longer the stock can preserve this breakout and the more of the gap that it can preserve, the better. Well, what is that actually telling us? It's telling us that even with these profit takers in here who've been in the stock for a long time, even with that selling pressure, the buyers have been able to fend that off. They've been able to absorb all of that supply of stock, and then the stock, after perhaps a week or so, starts to gradually move higher, and it takes out the high from that gap up. That's a really good pattern. The more of this gap that retraces, the more stubborn the price movement is going to be on the way up. Well, how do you know that, Pete? Because these profit takers are able to drive the price of the stock down, and there may be more of them. And the news wasn't so compelling that buyers felt like, oh my God, I have to own this stock right now, and I'm going to own it for the next 2 or 3 years. That's the type of reaction that we want. This company is so undervalued, and given that new information, I feel so confident in owning this for the next 2 or 3 years, because that's ultimately what these large institutions are looking at. They're not looking at what did the stock do today or how is the quarter. They're looking at these long-term prospects. They're looking to place money for a very, very long time. And you have big gaps up. Okay, what got investors so dang excited about this news? I've got to go find out. You should take a look before you do any of these trades. You should take a look at the earnings report. You don't have to become a fundamental analyst, but you should at least know, what are the prospects? What has everybody so excited? And again, what type of product is this? Your best products are going to be disruptive. Some new type of technology, some cryptocurrency, a new cancer treatment, a new GPU. These are the things that excite long-term investors. These are the types of events that make them want to own the stock for the next 2-3 years. And when they have that type of mentality and that type of staying power, you're going to see it reflected in the price of the stock. And I'm going to show you that. Those moves are going to be very tight and orderly, very, very steady, because every opportunity that these buyers have, they're trying to accumulate these shares. So the dips are brief and shallow. So what? So what? That makes it easy for us to ride those positions. We don't get shaken out, and that allows us to predict future price movement and to build these positions. So if you get a large gap up like this, sometimes you will see a pretty good pullback. Wouldn't be the worst case scenario if you read the news and this really seems like this is going to be a revolutionary new product, then monitor that stock. Well, how do we do that? We set alerts. When you see a really nice big breakout to a new all-time high, you should instantly be thinking, hey, This could be a longer term prospect. I want to keep it on my radar. Alerts are a great way to do that. We've got a ton of alert variables that we use so that when you get a pullback like this, you can monitor when the stock goes from relatively strong to relatively weak. And then when it goes relatively strong again, we get an alert. Well, hey, was this dip brief and shallow? If yes, this is going to be a really good prospect for us. You can also use price alerts. You can use line alerts. Use anything that you need to keep track of this stock. Oh, you had a little high here and the stock is pulling back. Put an alert line there. Oh, you had a pullback and there's another little, put an alert right there. It's so easy to do. Keep these stocks on your radar. Something big has happened. And when you get some of these pullbacks like this and you start to form support, you can even sell some out of the money naked puts to try and buy the stock a little bit cheaper. But again, you don't want this retracement to be prolonged. You don't want it to last more than, say, 10 days or so. If the move is really, really big, it's going to take longer for the buyers to absorb this supply of stock because that is a really big move and they're trying to lock in those gains. Now, if you get a big move and you don't get much, if any, retracement, wow, this company's got something special going on. You're going to be wanting to take an initial position as soon as it gets through that high after the earnings announcement, that gap. Take a starter position. You're not taking a big position. By the way, some of you might have clicked on this thinking that, oh, Pete's going to teach me how to buy stocks ahead of earnings announcements and I'm going to swing trade them over the earnings announcement. We don't do that. That is a 50-50 crapshoot. I've seen companies that come out and post unbelievable numbers and they sell off afterwards. And I've seen companies that come out and post horrible numbers and they rally after the numbers. So we don't trade over earnings announcements. We wait for the reaction. We wait for clarity. We wait for certainty. That's how we trade. So how do we find them? Well, this is actually a stock that we'll take a look at a little bit later, but we're going to use searches to find those stocks. So let's run a couple of searches and let's take a look at what's currently happening. As I speak, earnings announcements are just starting to unfold right now. So what we'll do is we'll run a current search to see who's recently reported. And we'll take a look at prior earnings. Okay, this is how I do it. This is my software. It's called Option Stalker Pro. I've designed it to trade the system that I'm teaching you. There are tons of other platforms. You don't have to use my platform. Whatever platform you're using, you should be able to do some dang good earnings searches. What I look at is I look at projected earnings dates. When can I expect these companies to announce? I want to stay inside of a 3-week window typically, because that gives me time to trade the stock. I don't want to be in the stock and then find out, oh, they've got earnings in 5 days, so I'm going to have to be right out of the stock. That's not much of a swing trade for me. But at least if I have 3 or 4 weeks before they announce earnings, excellent. I can also take a look at when the prior earnings were. Hey, isn't that what I was just talking about? Earnings announcement has happened recently. We need to give the stock a few days to digest those gains, and then we want to start looking at the price action. So that's a very important variable for me. And in this particular case, I looked at companies that would have announced yesterday or in the last 20 days. Perfect. We're not going to have a lot of candidates because earnings season just kicked off last week. So in the next 2 or 3 weeks, we're going to start seeing this list really pile up. And again, as I click through these results, I'm setting alerts for stocks that look really attractive. Big, giant breakouts, blowing through all resistance levels. We have that escape velocity, as I like to call it. There's nothing standing in the way. Another variable that I have marked is AVWAP-E. That's an indicator that I use, and it measures the average volume weighted price since the first moment that that stock could start trading after the earnings announcement. Why is this important? Because that's when asset managers have decided, hey, this is a company I want to start putting money into. And what they do is they'll hand off a large order to a company like Citadel, who's an executing broker. Citadel is going to work that order for a few days, possibly even a few weeks, and they are going to honor the average volume weighted price. And then the institution, the asset manager, they don't have to worry about market impact costs. Citadel is going to take care of that for them using their complex algorithms. This is a very important metric for me to use, and I have it on all of my stock charts. Is the stock above AVWAP-E? Yes, good. That's bullish, so I'll have that marked. Does it have some decent option liquidity? Yes, I'd like an option liquidity rating. It's not the most important thing, okay? I'd rather trade a good stock than a stock that has options. So I'll take stock positions. I don't have a problem with that. But if I have decent option liquidity, it at least tells me that it's not some obscure small cap or micro cap stock. So I've got that marked as well, but you don't have to have that marked. And then in this particular instance, show me a stock that's got some decent D1 relative strength. So just to recap very quickly, it's got relative strength on a D1 basis. It's strong relative to the S&P 500, has some decent option liquidity. It's above AVWAP-E, and it's announced earnings in the last 20 days. This is my opportunity. This search allows me to go in and find those gems because the pattern that I'm going to show you is not super common, but it's the only one you should be trading. And there might only be a few dozen stocks on your radar the whole quarter, but that's okay because you're focusing where the strength is. We're going to take a look at these stocks that I like, stocks that I don't like. ACI is at the top of the list, so let's take a look at that one. There you've got an earnings gap up after a downtrend. Lots of overhead resistance. This is not what I'm looking for, although you can see that the stock did gap up. It preserved the gap, and now it's got some follow through. When might this stock be attractive to me? At minimum, in a very short amount of time, I need to see it through that 200-day moving average. That tells me that buyers see this as a really good opportunity. They didn't wait, and it didn't linger because they're still selling pressure. Anybody that bought the stock up here had nice profits and they're selling. This is in a longer term downtrend. So it tells me that the company probably doesn't have gangbuster, go-go product news, future profits that are exciting asset managers. If it had that, well, what kind of price action would we see? Boom, 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 boom in 2 or 3 days. That's the type of urgency that I would want to see if I'm going to be buying a stock in a downtrend. Again, make sure you take a look and see what the company does. I believe that was a food company. A food company. Okay, well, they're stagnant. I mean, they're not going to have any exciting new developments. Asset managers are not going to be plowing a ton of money into that. Nothing. Okay, above AVWAP-E, no gap up, no interest. Okay, I'm just flipping through. Again, nothing. You can see by the B or the A. B means before the open, A means after the close. AXP. Oh, there's pretty nice. Okay, good earnings reaction. Didn't gap, kind of grind higher. Okay, it's a financial stock. It's very choppy. There's no real excitement here. So I'm just going to go through the list and we're going to take a look till we find something that looks really good. Hey, GM. Car maker. What is this? Some new EV car? What's the product that's got everybody excited? They beat their earnings estimates, so the stock did gap up, and you can see there's some follow through in it. It's not going to be the kind of company that I want to own longer term because you can see that it really doesn't go anywhere fast. It's very vulnerable to cyclical movements. HAL, nice gap up. Choppy, no interest. I'm still looking for something that's going to grab my attention. Now that's the type of breakout that we would want to see. ISRG, stock has been in a downtrend, but that earnings announcement blew through all of the major moving averages. Holy cow. Well, this is only the second day after the number, and you can see how it opened on its high and it pulled back the entire day. That's not exactly what I'm looking for, and this is a big gap up, as I had mentioned to you earlier, so it's going to attract profit takers. What would I be looking for in this particular instance? I'd want to see it stay well above the 200-day moving average. Can't even test the 200-day moving average. Okay, buyers would see that as an opportunity to load up there, and they're not going to wait for that 200-day moving average to be touched. They see this as an opportunity right here, right now. Keep buying it, keep buying it, keep buying it. This company makes medical devices for surgery. Yes, I'd want to see this preserved in perhaps the next 3, 4, 5 days. I would want to see it take out that high right there. March, 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 March higher. The sooner it happens, the more urgent buyers are because they're able to absorb any supply that these profit takers are throwing at them. Because remember, there are going to be people who own this stock back in here, 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 here. The whole quarter the stock has been down, okay? These people in here are going to be anxious to lock in profits because they've had a loser during the entire quarter. Here's my chance to get out of this dog. I'm taking it. That supply is always going to be out there. And if it is quickly worked off, hey, that's a good sign. These buyers are super aggressive. I want to see that erased very quickly. That's the type of price action that I'm looking for. J&J, really nice. Okay. But this is just a nice grinder. Back in here when they announced earnings, this is nice. You can see gap up through horizontal resistance, blows through all of the major moving averages, blue sky ahead. Fantastic. You take your initial starter position here when the stock bumps up, and you can see that over time, it's able to preserve AVWAP-E. Remember, I told you this is an important number, and you can see how it bounces off of AVWAP-E. All right, you know what? I like this. The dip was brief and shallow. It's been consolidating. And now I'm starting to see some signs of life above AVWAP-E. I'll add to the position here. And my average cost is going to be down around AVWAP-E where everyone else was buying it. Cool. And then now the stock starts to move higher. You can see this nice steady price action. Is there a huge product? Is there incredible demand for Johnson & Johnson and what they're doing? Not really. It's kind of a steady medical supply company. A little bit on the stodgy side. Decent price action. Could I trade it? Yes. Is it the gonzo, go-go, gotta have it type of company that I'm looking for? Not really. But that's a good example of the price action that we're looking for. So again, I'm just looking for these reactions. 3M, nice big breakout. Choppy stock. Is there a new product? I don't know. It's going to have to be a big follow through. PEGA. This is another nice horizontal breakout. Blows through all previous resistance. On heavy volume, it has relative strength. Blue skies ahead. The stock opens well above that horizontal resistance. And what did it do all day? Bye. There's no supply up there. They can't get enough of this. So yes, I like this price action. I'm going to be watching it for the next couple of days. And if it continues to add, yes, I'm going to be taking a starter position in it. And I'm going to be adding on follow through. I need to have that initial breakout. I need to see those gains digested very quickly, exhaust any supply of stock, exhaust that profit taking as quickly as possible, and then get through that high after the earnings announcement and show me some continuation. Those are the patterns. Hey, Pepsi, they just announced, they make food products, not interesting to me. This company ran up. Earnings before the open, no big gap, a little gap in here, but you can see persistent buying and follow through. Logistics company, not the most interesting, but worth maybe setting an alert to see if it has some follow through. So this is the process that we go through. RTX, defense contractor, really kind of decent price action, a good trender. So nice orderly type price action. That's important. The stock is not doing this herky-jerky all over the place. When it starts a trend, it tends to move higher. Okay, it's workable. Defense contractor, probably not any big new developments, but a nice breakout, and we're seeing a little bit of follow through. I'm going to move over to another list. Again, I'm just showing you a variety of different stocks that have announced earnings to give you a feel for what we're looking for. We're going to have a lot of earnings announcements coming out this week, next week, and the week after. And so this list that I've just shown you right now is relatively short. And as this list grows, as more companies start to announce, we have a whole host of other variables that we can add to narrow the list down because we don't want to be flipping through. You're swing traders, okay? Typically, swing traders, you're professionals. You have other careers. You have busy lifestyles. You need to find these prospects quickly. So at the end of the day, when you come home and you want to spend 10 minutes searching for stocks, you want this list to be relatively short. You want to zoom right in on those best candidates. So there are all sorts of other filters that we can add. Above the 200-day, above the 100-day, above the 50-day. Yes, those are all really good variables to use. There are a ton of other ones. We can add buy signals from the system. You can add a lot to narrow that list down. But ultimately, when you see that big breakout and you're monitoring companies that have announced in the last 20 days, so this is kind of a rolling calendar forward, you're looking for the patterns that I've just told you about. The big gap up, that quick digestion, and then that quick follow through. Those are going to be your gems. Let's go through and let's take a look at another search. And again, this is based on earnings. So in this particular instance, I'm still looking for companies that have announced earnings, but I want to make sure that they're not announcing earnings over the course of the next 20 days. So as the quarter starts to unfold, now I'm going to be looking for prospects that might still have 3, 4, 5, 8 weeks left of life. So what I'm going to do is no earnings within today to the next 20 days. So I've at least got 20 days when I can be in this position without having to exit before the next earnings announcement. Very important to me. And sometimes companies will announce major developments during the course of the quarter. Well, this is going to help me catch those companies and catch those stocks. And you can see that here I do have above the 200-day, 100-day, and 50-day. I don't want to have to mess with those resistance levels, okay? I can also look for trendline breakouts. Yes, I want it to be above AVWAP-E. I always want to have that. Option liquidity, pretty decent. And we've got D1, relative strength. Well, this is a pretty long list. And I need to narrow it down at least a little bit here. So I'm going to add another variable. I'm going to look at percentage of 60-day range. So I'm going to add 80 here. It's in the upper 20 percentile of its 60-day range. That tells me that it's relatively near its 60-day high. And let's see how this list gets reduced. Okay, now I've got a decent list to work with. You can see some stocks, like the ones that recently announced earnings, are still in the list because they just released earnings and they are not going to be releasing earnings again in the next 20 days. So yes, they're going to be in the list and you'll be able to filter through some of those. And I'm going to just click through some of these so that we can take a look at previous earnings reactions and if there's an opportunity for us to get long right now. Here you can see there's earnings after the close and the stock sells off. Nah, I'm not particularly interested in that. I want that earnings announcement to be driving the price action. AXP, I think we already looked at. That's a financial, really choppy, nothing there. BBY, retailer, what did they sell more TVs? I'm not that interested. I'm just going to keep going through. CIEN. Hey, there could be an opportunity for me here. Look at that nice tight price action. Folks, this is what you need to be trading. You don't need to be trading anything but 2 or 3 dozen stocks when you're swing trading. Once you have them on your radar, you keep them on your radar. You set trend lines, you set price alerts everywhere. You keep them on your radar, you put them in a watch list, and that's all you watch. And what are you watching for? You're watching for dips that are brief and shallow, perhaps below the EMA 8. Great. Hey, look, the stock rebounded. It's making a new 20-day high. This is a stock I want to add to. And then you're adding. Your average cost is down here. And eventually you build a really nice position. And that's your profit. Could you do option strategies? Yes, you could when you're in the accumulation phase. You don't want to be buying when it's way above the EMA 8. You want it to be fairly close to the EMA 8 and AVWAP-E. Then yes, you could sell a bullish put spread or a naked put below AVWAP-E on the notion that it's going to find support there and that you would be a willing buyer there. And if you're not able to buy the stock there, you're going to be rewarded handsomely with, say, a 5 to 10% return. CIEN. Yeah, beautiful, beautiful stuff. So again, this is the kind of process that you're going through. And you're just looking for that nice, tight, orderly price action. And I'm just scanning down the list to see if there's anything else. Okay, here you've got an earnings reaction. MU didn't do much initially. Okay, well, that's because it had run up. Remember, I mentioned to you that when a company has run up, they're going to be profit takers and they're going to be waiting to see how that earnings reaction comes out. In this case, it was in line with expectations. It took a few days for the stock to work off that supply of stock, and then it gradually moved higher. I'm not super interested in this. Okay, back in here, was there anything worthy? Not really. Micron's just not doing it for me. Is there a day trade in there? Perhaps. But it's not the one. It's not the stock that I was looking at earlier, CIEN. As I go through this list, I'll take a look at a couple of more. Workday, choppy. Walmart, choppy. Let's take a look at a watch list of stocks that I have. These are the types of companies that we're going to want to trade. And I've got full of them that I've highlighted. I'd mentioned to you that they're going to be 20 to 30 stocks. That's it. That's all you have to monitor. And they're going to have this type of price action. And this type of price action is not going to shake you out of the position because the dips are brief and shallow. The dips represent buying opportunities. So you've got a stock here. This was a nice gap up. It blew through all of the prior resistance levels after that earnings announcement. It pulls back initially. Buyers come in, view it as a good opportunity, and now the stock is starting to gradually inch its way higher. So every time you come down to that EMA 8, you've got an opportunity to evaluate. Was the dip brief and shallow? Yes. Okay. I think I'm going to want to buy it here. You can set an alert there. Okay, we've got through that level. I'm going to add to the position. You're adding on price confirmation. And then you can see how nice and steady this stock was the entire quarter. You didn't have to sweat it at all. You could have sold right in here. You could have sold puts down at AVWAP-E. Could have sold puts down at AVWAP-E. Never came close. Super, super easy trade. Ride that puppy higher. Or just be long stock. That's where you would have made even more money. It really depends on how risk adverse you are. So let's take a look at some of the other stocks that we have in the watch list. STX, that's been a beauty. Look at that. Okay, not much of an earnings reaction, but again, caught in a search like the one I'm using because it's above AVWAP-E. It's already announced earnings. It's starting to make a new high. It's at the top end of its 60-day range. Awesome. I start to see this kind of breakout. I start getting excited about it. And then look, now we start to take off. It took a while for this company to digest that move, which here you go. Here's a nice move. Okay. It's been floundering around a little bit. How do I know that without looking back at the chart? Because it's below its moving averages. How do I want the stock to move after the earnings announcement? Boom, boom, boom. I want it to clear all of this resistance as quickly as possible. When that happens, it tells me asset managers are aggressive. They are buying up all the supply. Initially, I'm not excited about it, but I do like the fact that it's been able to advance. There's follow through, and it easily, quickly gets through these major moving averages. So I buy here, test the major moving average. You would add here, or you can sell naked puts down at AVWAP-E. Choice is yours. That gives you more cushion. That'll allow you to buy the stock here, actually even lower, probably around the 200-day moving average, given what the option implied volatilities might have been at the time. Every time that you get these tests, that might be a little bit too far away from AVWAP-E to get a decent credit, so you might have to go a little bit closer, but you're still buying a stock that's in a nice, tight, orderly trend higher, indicating that buyers are aggressive. There are no big dips. Dips are gobbled up before they even get going. That's how you have that price action. Take a look at another one. These stocks are out there, okay? These stocks are out there. I'm telling you, they're out there. So if you're not finding them, look harder. Use searches to find them. Use alerts to keep them on your radar. Big gap up. Okay, big gap up. What's the stock done previously? It's run pretty hard. Okay, so it might have to digest these gains. Again, here you get an earnings reaction. Hasn't done anything. It took a few weeks, but it did move through these major moving averages pretty quickly. So yes, there was an opportunity. It happened within 2 weeks or so. So that's not bad back in there. But here you can see they're excited. Any profit taking that you would have had is quickly worked off, and the stock just continues to float higher. So you've got an initial position here, and you've got an add here. Haven't mentioned this. The market drives everything that we do. So you have to be in a bullish market cycle first and foremost. And I've already mentioned that in my other videos. So let's go back into the watch list. I'm just going to click on a few stocks. You get the idea. Okay, BE got a big run up before that earnings announcement. This should attract some profit taking, and it does, but eventually the stock works off that supply, and this search right here finds that stock. And now we know that price action is very steady and very consistent. IREN, another one, gap up, takes a little bit of time. It's already been running up pretty well, so it takes a little time to work off the supply, but only about 5 days. Now it's above AVWAP-E. Now it's making a new 60-day high, a new all-time high, a new 20-day high. Beautiful. Ding, ding, ding. This is probably going to be a really decent stock to own. No, I don't worry that the stock has already run up a lot and that it's making a new high. This only confirms that buyers are aggressive. They've seen the news. They like the prospects. They want to own this stock. Again, EMA 8 gives you an opportunity to add. Lots of opportunities to sell naked puts on this one because the option implied volatilities are super, super high. So you can be distancing yourself from the action, selling those puts below AVWAP-E and generating some really awesome profit without having to do a lot of legwork. Once you've gone through, once you've done these searches, once these stocks are on your radar, pretty easy, but you're focusing on a handful of them. So they are out there. GE, let's take a look at that. Nothing great in here, yes, it's moving higher. It had better price action back in here. Nice big earnings gap up, able to hold the gains right here, add to them instantly, blow through all resistance. All right, that's what we wanted. There's a little opportunity right in there. Even in here, you're still fairly close to AVWAP-E. You're trying to get through this horizontal resistance level right here. You're not sure if it's going to be able to do it. This price action suggests that it will be able to do it, but you want to play it safe. You sell some naked puts below AVWAP-E. Oh, it broke out. I think I'll buy some stock, and I'm going to be making money on my puts that are going to be expiring, worthless. That's how you do it. Caterpillar, heavy equipment manufacturer. Is there anything I can really get excited about with this one? Not too much, but once it does get through this horizontal resistance right in here, you're looking at it poke through. It's above all the major moving averages. There's your put selling opportunity right in there. You've got another opportunity to maybe sell a bullish put spread. I would use that horizontal prior resistance, which is above AVWAP-E. You're not going to get a lot of money for this because at AVWAP-E because it's too far out of the money. So you're going to have to find a closer support level. Right in here, you might have a chance to sell a nice little bullish put spread or just sell some naked puts. But yes, this is the nice, steady type of price action that we're looking for. And then finally, Rocket Lab. Okay, Rocket Lab, what did it do? It got through this horizontal resistance, wasn't really around earnings, not much of an earnings reaction in here, so not super interesting. In here, not much of an earnings reaction, so nothing great, but yes, some steady price action. The reason that the stock is moving higher is because of prospects. It's not because of profits. So this company has a lot of growth potential, but no real profits. And that's why you see a great big yawner around that earnings announcement. Not the best stock, not the worst stock, definitely one once it gets above all these resistance levels and is still pretty close to AVWAP-E, you've got some put selling opportunities. You're looking for that price consistency. That's the main thing that I want to stress. 20 stocks, 15, 20, 25, 30 stocks. That's all you need to have on your watch list, but you need to keep updating your watch list. So I'm not really talking about exiting these trades right now. The exit strategy is actually pretty easy because when you have this type of strength, it tends to continue right through the earnings announcement because these buyers are motivated. As you get into the earnings announcement, we don't hold over earnings, so we have a natural exit strategy. But the most important thing right now is we have earnings season on our doorstep. This is when we have really big opportunities. Going to be a ton of breakouts. Some of them are going to blow through all that resistance. Some of them are going to have big gaps and they're going to fail. It's going to be all fluff. It's going to pull right back because those profit takers are going to smash that stock down. Well, they've overpowered any buyers. So as good as the news was, it wasn't good enough. Those are not the patterns that we want. Patterns that we want are the nice gaps up through those resistance levels that hold. So after 3, 4, 5 days, all of those gains have been preserved. Tick, tick, tick. We start to see the stock move higher because all of that supply has been exhausted. Buyers are having to get more aggressive to take their positions that they want to own for the next 2 or 3 years. They don't care that the market was down today. They don't care that the market's been down for the last 2 days. They want to own this stock for the next 2 or 3 years. That is what gives it relative strength. That is why the price pattern is so steady. Those are the stocks that you want to watch. The quicker that the stock is able to get through that digestion period, the better, because all that supply was quickly worked off. Buyers are super eager and aggressive. Those are the ones that you want to add to with starter positions quickly. Those are the ones that are going to continue to have follow through where you're probably going to be adding pretty soon. And if you're a little bit more nervous about it, sell some out of the money naked puts down around AVWAP. I hope this lesson has helped you. Again, please give it a thumbs up. Please share it with other traders. Subscribe to my YouTube channel. Get me above that 25,000 count, and let's keep building from there. Thanks so much for watching. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.